around
It
noon.
is.
We
Yeah.
had a little bit less difficulty with the technology today. However, it's still a disaster. And I
It's still
always
there.
like mean to do it. And then you and I get to get on this thing. And I'm like, I probably should have done this yesterday and figured this out, but just never seems to work out that way.
No.
However,
That would only make sense to do. Like that's why
but that's not
do it
how we
that way
roll,
though?
man. That's not how we
Yeah.
roll. And
No.
the thing that's funny is like we talked yesterday about what we're going to talk about yesterday, and we're like,
Yeah.
wow, we prepared like 12 minutes or 12 hours in advance. This is pretty
Yeah, look at
impressive.
us go. It's not 30 minutes beforehand like, "Hey, do we have
Yeah,
something specific we want to talk about?"
yeah, we're actually like being professional, I think. So,
Yeah.
but yeah, we have to provide that value to our to the so many viewers that are watching. So,
The demand is out there and we're listening.
oh man. Hey man, how are you doing? How's it been? I guess I didn't even do an intro into you. Just so for the people that don't know you, it's Cody. This is my friend Cody Wilhelm with
Yes.
Residential Mortgage, out of Washington, but serves the areas of, I think, I'm going to see if I can name it: Alaska,
Mhm.
Oregon, Idaho, Washington. Am I missing any?
You are, but that's okay because there's a lot of them.
That's a lot.
We California, Nevada, Montana, Texas is like just a few weeks away. Georgia,
I wasn't even
Tennessee. There's
close. I
yeah,
didn't
no,
even have.
you were close. You got the primary area, but we're
I got
just
the areas I
expanding.
care about. That's the
Yes,
areas I care about. Like,
yes, we're just
uh,
expanding. Colorado, pretty much like right now we're I think almost everything west of Texas, and then we've
okay.
got Tennessee is in the hopper, and Georgia is approved, and so
Now, without
all
going
over the
into
place.
your lender stuff, like what does that entail? Like, how do you guys get approved for, different states? Like, is it the company have to get approved, or you guys have to get approved, or what's, or both?
Yeah, the company gets approved, and then because we are a bank, we're owned by a bank, like a mortgage company owned by a bank. We have then the FDIC approval to where I, as a lender, like my license that I got, it was originally Oregon and Washington, and then there's other states that you can add on to that.
Mm,
So I take the continuing education for each state that we are licensed in. I take the
okay.
continuing education for that, and then I'm able to lend in those states as long as I do the continuing education for those states each year. So
That seems
it
like a
makes it
lot.
pretty easy. I don't really have to. I mean, it's hours that you're doing to do the
Yeah.
continuing education, but I don't really have to like recertify or do anything for
Okay.
those. Just Oregon and Washington, since those are the primary ones, those are the ones where it's like a lot more hours. Like some
Yeah.
states, it's only 2 or 3 hours. Oregon, Washington, it's like 8, 10 hours.
Okay.
So a
Okay.
little more time, but
Interesting. Well, that's good, man. The
yeah,
more states, the more people you can help out, huh?
the more the merrier. That's what I say.
Hey, well, I wanted, because we prepared and we were
Uh-huh.
ready last night.
Hmm.
We don't even know what to do with ourselves.
Yeah.
I was talking to you about some of I've had more and more, especially recently, more and more contingent offers and contingent buyers and contingent sellers like that are like,
Hmm.
I'm not moving unless I find a home, and I'm not buying unless we can get rid of our home. So I wanted to chat today because it is, I think, at least anecdotally in my sphere, in my world, the contingent offer, and kind of, I can talk some about what we can do on our end, but something that maybe a lender can do. And I think we may have covered it a little bit with you guys and what you do with that sort of thing, or a different option with lending on that. But I think it's a good
Hmm.
topic to cover. So,
Yeah.
my first suggestion, I think, would be to, obviously, is to get pre-approved with every, like, working with a lender in the front end is critical to this process. I have a client that's working, I think, I don't know if he's with you or not. I think he should be with you, but, and should be working with you. But
Yeah.
anyways, it was, the reason I bring it up is because the topic that we had was, they're jumping two steps forward of like, okay, I've got to buy, we got to sell our house,
Hmm.
and now what? And they come to me, and the first question I ask is, are you pre-approved, and can you get pre-approved? And most people don't do it, like,
Yeah.
for some odd
Yeah.
reason. And
It's
I
not
get it.
fun.
You don't know, like,
That's what they think.
you don't know what you don't know. And it's like, if you only do this process once in your life, twice in your life, I totally get it. But my
Hmm.
biggest key is to get with the lender on the front end, because not only are you going to be helping them to get pre-approved for what they want to buy, but also you can help with the transition on that contingent purchase and kind of make that seamless process of timelines and different various things that need to be done in order to get a person from their current to their next home. But
Hmm.
can you quickly go over just kind of what your company offers, as to like, say they, I'll just use an example. They're like, "Hey, we're gonna buy, but we're contingent on selling." They get under
Hmm.
contract. They have a certain amount of time before they have to sell that home. They're coming up on that time. They're panicking because, they're not going to sell, not going to get under contract in enough time. They're going to lose this house. Is there something that you guys provide that can kind of help, with lack of a better term, bridge that gap?
Yeah.
Like,
I mean, it's really the best thing. I don't want to say the only thing, but a bridge loan in that type of situation is really ultimately going to be what is going to be best. And kind of like what you just said, it bridges that gap, right? Like the intention of it is it's a short-term loan. It's essentially a home equity line of credit that you take out with the intention of using it for down payment for the next home, knowing that you are going to be selling that home, in a month or whatever it is. So it's a real short-term loan. And the difference being, the short-term nature of it, you can have a home equity line of credit and only have it for 2 months, but it's really just the intention behind it because um, you know every banks want their money, and if
yeah.
you're only going to pay the interest for a couple months, it's not really beneficial for them to do all that stuff. We don't offer bridge loans, but I know there are some places out there that do.
Oh shoot, I
But
thought you guys did.
no, no, but
We should
there are
just change
places.
topics then. We're not going to cover anything.
I
That,
can't do everything.
like,
I'm not. I'm okay with that.
let's move
But they
on.
just have different. Yeah, they just have different terms on it. Like anything. Like if you're only going to have it for a couple months, then it might be a little bit higher interest, a little higher fees because they know that it's a quick
Yeah,
transaction. If you have time, I would, especially if I could go back and tell everybody 2 years ago, I'd say take out a home equity line of credit,
yeah,
get that set up. We can offer second home or second loans, like a standalone second. Um, but then you start to get into like if you're going to turn it into a rental property, then there's kind of different caveats with it. But the best thing that you can do is get a bridge loan. If you don't have enough down payment, a lot of times people don't realize too that if they have the down payment, if they have just the minimum down payment, they can just take that and still qualify with the other property, purchase it, and then like what we talked about I don't know, a month ago or so, doing a recast. That's a really good way to go. But I know that not everybody has the
yeah.
money to be able to put the minimum down payment down. So bridge loan, um, home equity line of credit, maybe if you're going to be holding on to the property. But I do know that a lot of places that don't offer bridge loans will not offer a home equity line of credit if they know up front that it's only going to be there,
Used
if
for,
the intention is to purchase another primary residence. But again, some places might be a little more lenient if they know that it's going to turn into an investment property. They're going to hold on to it, and it's not just going to be cashed out right away. That they're going to get it. So
so what do you
um,
guys do? Like, is a HELOC cool with that? Are you guys cool with that?
we don't offer HELOCs.
You don't. How am I?
No,
Am I talking to the
no.
right person here? Like, I literally was like, I was on this track, like I'm gonna find out with Cody all this stuff. I'm sorry,
No, so
man.
we have no. This is good though because it's important for people to understand. We have the only thing that we really have right now here. Like there are some of these products that are used in Alaska because that's where our home base is. But until we get actual banks down here, they're just keeping some of those products for
Oh, okay.
Alaska based. So yes,
That's maybe what
technically,
I was like thinking of
yeah,
as
they're
I
they're
talked to you quite a
offered.
bit, and I was
It's
like just generalizing when I shouldn't have generalized.
No, this will just be for the Alaska clients that
Okay,
can
cool.
access some of that stuff. But for people here, yeah, it's going to be home equity line, bridge loan. Again, you can do like we can do a standalone second loan, um, and so you could use that. It's just again, it's all the intentionality behind it. So it can get a little bit tricky ultimately
Yeah.
if you're in a bit of a
Well,
pinch, but
exactly, and that's what it normally is. And I guess like I've had one transaction that comes to mind of how quickly, and obviously we're overgeneralizing, and I'm going to overgeneralize here, but I had a client that, contingent, but they managed to get quickly double qualified um,
Uh-huh.
using stated rental income. I don't know
Yep.
what you guys have. I've been on a 0 for 2 so far with what you guys do, but hopefully, can you explain like kind of what that entails and what that, what that could mean? And that again is something that I would encourage them to do beforehand. So it's like,
Yeah.
all your options, what can happen in the event that you get up to that panic time. But yeah, go
Yeah.
ahead.
Yeah. So I don't actually do any type of financing. I forgot to tell you that.
Yeah, you're just here.
I just
Like you're a
volunteer here.
fraud.
Yeah. I just
You're
come
like,
into
I
the office,
literally
make a
hang
cup of
out.
coffee. Yeah.
Yes. Like I hang out every Wednesday waiting for this moment and that's
This is
it.
it. Yeah. Um,
Uh,
I forgot what your question was.
we were talking about stated rental income or
Oh,
rental
yes.
income. Like if someone comes to me with a panic and like, hey, can we double qualify? What does that look
Hmm.
like to you in the midst of a transaction where they're 2 weeks out from not selling, not getting under
Yeah.
contract? Like, what does that look like?
Yeah. So I'm glad you brought that part up because that is usually ultimately, if you can't get the financing right away from a HELOC or a bridge loan or something, then turning your current home into a rental is going to be the next best thing. And so when it comes to the double qualifying like that, there's two ways that we can count the rental income for the property that you are vacating. You can take that and there's the appraisal, there's going to be a rent schedule in there when they do the appraisal on the property. Or you can get a lease agreement. And as long as you have a lease agreement along with the security deposit, then you can count that full amount in there.
Well,
So it allows them to be able to qualify debt to income wise. I mean, you're still kind of running into the issue of not having enough down payment,
for sure. For
but it
sure.
allows them to qualify if they otherwise maybe say wouldn't
Yeah.
qualify because maybe it's quite a bit of an upgrade. I actually had somebody reach out, a friend of mine last night, with a scenario kind of similar to this where he is potentially looking at buying another property, and it kind of was one that just fell into their lap.
Yeah.
Unfortunate circumstances for somebody else, and it's fallen into their lap, and it's like when you're not planning for it, it's not. You're not going, you're not sitting there making sure that everything is
For
ready
sure.
to go when it happens. You're like, oh man, if this is something we want to do, we got to figure out like within hours or days,
Yeah.
what can we do? Is it realistic? So yeah, rental income to be able to offset is actually really easy. And same thing can apply when you're purchasing a rental property. You can use the market rents for that, which is what's going to show up on the appraisal. Or again, if you have a lease agreement, that kind of trumps all to where
Yeah.
you can use that income right away.
So are you, so I know this comes, renting your property, obviously in Oregon especially, comes with its own risks of once you get a tenant in and those sort of things. So there is a
Hmm.
risk post close, if you've
Yeah.
got clients coming in. Um, do you guys, does it matter to you guys how long those renters are there? Can
Nope.
they can they then turn, because the goal ultimately, more likely than not, if they're getting in the scenario, was to sell their house. So they
Yeah.
really need that cushion, the 3 months maybe to sell, to close on
Hmm.
this, sell their house and have those funds to maybe recast or do whatever they're going to do.
Yeah.
Do you guys have a limit on, you know, how long you can have a renter in there, or what's that look like on that end?
I would have to look at what the actual, like, if there's something in the guidelines that say specifically what that timeline is. Um, to my knowledge, and if anybody's watching that wants to, they can fact check. But I believe that it is what your intention is. So if your intention is to rent it out, then that's what you're planning on
Yeah,
doing.
okay. That's what I figured.
Whether you rent it out for 2 months and decide that it wasn't the right fit, or you rent it out for 5 years, it's kind of the same
That's what I
thing
figured. Yeah.
with purchasing a home. Sometimes life changes, and
Yeah.
you get fired, or you realize that this neighborhood is not what we thought it was, and you've been there for 6 months and you're like, I got to get out of here, this place sucks.
Yeah.
um, I think it's
So
really just the intention, and you're at closing, you're signing all the paperwork that says this is what I am doing and this is
yeah,
what my plan is. So at some point, it's just you just have to take people for at their word for
for
what
sure.
what they're doing, and once
Because
it
at that point,
closes,
you can't really you can't really
yeah,
control it, right?
no, I
Like,
mean realistically, somebody could quit their job the day after closing,
yeah,
and we can't change anything about it. You
for
hope that
sure.
that's not the case, but ultimately, it's like once we have done all of our verification and proving that this person is a worthy buyer based on all of the information that they've given us, then at some point it's you're innocent until proven guilty.
So it sounds like just be shady with your lender so you don't
That's
tell
all it
them. Just
takes.
tell them very little. Just give them very little information and
Yeah.
do whatever you want. Like,
Yeah. It's like I tell people too, it's kind of like, I'm not a lawyer by any means, but it's like when we're going through the process, I'm like, tell me everything because I need to know exactly what's going on because the worst thing that can happen, and I'm sure you've probably seen it
yeah.
too, is the thing because whatever it is, it always comes out. Like
Oh
it
yeah.
doesn't matter if it comes out in the beginning or the middle or the end, but most of the time it seems like anytime there's something hidden, it comes out at the 11th hour,
Yep.
and we're
Yep.
like, oh, how did nobody like
How did we not
you?
see
Yeah,
this?
you
Yeah.
didn't tell us this, or why
Yeah.
wasn't this going on? And it's like, oh, I didn't think you needed to know, or I didn't want you to know. And you're like,
Yeah.
oh, now
But
we
I
have
had
like
to.
2 days
Yeah.
to fix this problem. But
Yeah.
yeah, it causes for some interesting times.
Yeah, the contingencies are tough. They have their own, their own stresses and their own things that go on
Yeah.
with timelines. And timelines for us on our end is the biggest thing in getting your house
Hmm.
under contract and that sort of stuff. But there are lending options out there
Yeah.
that can help ease that stress because, really your house is going to sell, like the
Hmm.
house is going to sell. So if you are loving the house that you're going to be in, that you're going to, you don't want to lose it based on, hey, I might take a couple extra weeks or I might take a couple extra months at the worst to kind of get it sold. So I think
Yeah.
that's like important again to like talk to your team of your lender and your real estate agent and kind of see uh, what options are out there. Oh, I have a question for you with
Yeah.
one of the things with contingencies is rent back.
Oh
Um,
yeah.
either the buyer or the seller needs rent back post close or pre close, whatever it may be. There's all sorts of scenarios with rent back. I know that lenders kind of get a little uptight at a certain time limit that you are either renting back or renting the place back, or or vice
Yeah.
versa. What's the standard, or what is there a standard?
So the timeline that you're looking for is 59 days or
Okay,
less.
okay,
Because once it turns into 60 days, then they're considering it's an investment property at that point.
okay,
So 59 days or less is going to be it is a temporary transitional kind of situation.
okay.
So for our paperwork for everything, obviously the life does happen, and
Yeah,
it's not the end of the world. It's just what your intentions are.
I
Um,
see.
if you're going to be so 59 days or less most of the time. I mean, from everything that I've ever seen, it's like a week, maybe 2 weeks. I've
Yeah.
had some 30 days. I have had some that have been the 59 days,
Oh yeah.
but it's usually like there's something bigger going on, and like it's more of the buyers are really trying to make it easy for the sellers because maybe the sellers like elderly and not able to do that or has some health concerns or something like that to where it's kind of like we need to buy as much time but still want to close the transaction.
Yeah. Yeah.
But I'd say in most cases it seems to be I see mostly like 7 to 10 days, but 59
Okay.
days is the number that you're looking for.
I've had some that have gone nuts and that I've heard about, like gone a
Yeah.
while. And is that something that you particularly work with your lender on to say, hey, this is unique because of A? Like, and are they cool with that? Or do you just kind of do the whole, like, we don't know once we close? I
Yeah.
don't know. Yeah. Like, is
It's
that,
I mean,
I don't want to
yeah,
go down
it's
this shady route this whole show of like
right.
how to avoid telling your lender anything.
Yeah. Yeah, exactly. No,
But
you're going to want to set it up to where it's again 59 days or
yeah.
less, and
And then
then
deal with whatever comes.
again if something changes after that, then it's going to have to get taken care of. But
Yeah.
um,
Okay.
as long as it's not like, hey, I'm going to rent it back for 6 months, and
Yeah. Yeah.
it's the plan is to actually be selling the home still.
For sure, for sure. No, I
Yeah.
totally get that. I just know that there's some scenarios I've heard of and I've seen that are
Yeah.
like, how do we get around that? Because of, because sometimes you have the buyer is ready to move in that has the
Hmm.
loan, but the seller's like, I have to find a place. Like,
Yeah.
and then you have the seller dragging their feet and they're coming up on and the seller, like, what do they have to lose? So now you've
Hmm.
got almost a tenant type of thing. So yeah, it
Yeah.
can get pretty confusing with all that stuff. So
Yeah, absolutely. Yeah, we've got one right now where it's kind of it's that situation, but there's no rent back. It's the
mm.
seller just has not been able to leave the property yet. And so we're like,
Oh,
we're coming
geez,
up on a week
nightmare.
now and they're still working on getting everything out. So, and the buyer obviously doesn't want to close until the
Yeah,
house is
until it's done.
cleaned out and how it should be. So you
Absolutely.
just never know.
I
It's
know. What a
as much
nightmare.
as we both deal with the same, it's the same process every time. It's just a completely different situation every time.
Yeah, yeah, for sure. And I think that's why everyone's so unique. I think having, we harp on it, both of us all the time is like, and it sounds like we're broken records, but you have to have a team that
Mm-hmm.
knows what they're doing, that's working together to get you the best deal at the right time in the right place. Because it's like, if you just kind of dabble around with an agent or you dabble around with a lender and then you start getting into these contingent offers and start accepting these deals, man, it can go south so fast and you could lose
Yeah.
money and the house that you want,
Mm-hmm.
really quickly. So
Yeah.
we harp on it for a reason. We're not just harassing you. We
Yes.
harp on it because we know it's better for you. It's like eating your vegetables. Like,
Everybody knows it's the right thing to do, but candy
no
bars
one
look
wants to
good.
do it. Like,
Yeah.
okay. Well, thanks, man. Thanks for that
Yeah.
information. I know, like, we can cover a lot more with that contingency stuff. I'm sorry to harp on things that your company doesn't provide. So you'll probably
Hey, you
never
know
do this
what?
with me again.
That's not
But
what I'm here for. I'm here
hey,
to provide information.
part of our conversation last night though is we're confident enough to hand people over if they don't work for
Yeah.
us. Like if it's better that someone needs a different agent or a different type of
Hmm.
community or different whatever, then hey, go for it. And same with
You
lending.
know,
So
I completely agree, and I will say I have received some good referrals from people that I wasn't able to help.
yeah,
Um,
yeah,
because I
for
think
sure,
sometimes it's just, obviously if you can't help them, you can't help them. But I think there's something to be said too for people that are willing to say, like hand this off to somebody else that can maybe have a better product or a better opportunity or
for sure,
whatever it might be,
for
where
sure.
you're just you've got their best interest in mind.
For sure. So I think next week you just attack my credibility and just talk about how other agents do so much better and just
Yeah.
like subliminally say how another agent would do this better. Like,
Man, Joe,
and it'll
like
just be an
yeah.
attack on me. Like,
Oh, this is how you do it, huh? Wow, boy.
oh, really? Wow. No other agent does that. So, and
Yeah.
like,
Literally no one.
well, thanks, man. It was good
Yeah,
talking to you, and we will chat. We'll chat again next Wednesday. But we're getting the
we'll do it.
podcast going.
Yeah.
Uh, the Venture podcast is starting up. We've got a bunch of interviews. We'll start laying that out there pretty soon. So if you are interested in joining the podcast or being a part of this fun little talk with Joe and Cody,
Yes.
we'd love to have you on, especially if you're a member of the community or some sort of person that just has a story to tell for everyone.
Yeah,
You
and
got
if there's
anything?
anybody out there that's listening that is really good at putting podcast information out there in the podcast world, let us know.
For sure.
We've got a lot of interviews
We need,
recorded.
yeah.
We're just we're two guys that are not techie, so we're fumbling our way through it. So if anybody out there
Well,
knows how to do it, that
I
would
know
save us hours.
until this live stream, I thought I was good at it, but
Yeah, me too.
it's like every single time I just like I texted you today, like I have to come on early and figure out this figure out this audio stuff. It's a disaster. So,
Yeah.
anyways, okay. Well, thanks, man. And
Yep.
yeah,
Thank
we'll
you.
chat with you next week.
That sounds good. Have a good
Okay.
one.